The CEO of ARK Investment Management, Cathie Wood, hinted that the U.S. Securities and Exchange Commission, SEC, may approve multiple exchange-traded funds, ETFs, that track spot prices of Bitcoin at the same time. Today, we will look into Cathie Wood's opinion about the odds of spot Bitcoin ETF approval raise. Cathie Wood stated that the odds are going up, that the Securities and Exchange Commission will accept her company's application for a spot Bitcoin exchange-traded fund. Last month, Cathie Wood's US-based ARK Invest announced its debut into Europe. As the non-sovereign reserve currency of the digital sphere, Bitcoin offers a unique and affordable way for investment managers to diversify well-balanced portfolios and increase overall risk-adjusted returns. Though there are numerous methods to invest in the premier asset in the cryptocurrency space, there has long been one obvious gap, the holy grail of access, if you will, in the form of a US spot Bitcoin ETF. In April, US authorities received an application from ARK Invest, which declared it had bought the UK-based RISE ETF to help with its push into Europe, to create a spot Bitcoin ETF alongside Switzerland-based 21 shares. In order to prevent any potential competitive advantage for one spot Bitcoin ETF over the others, Grayscale's legal team asked the SEC to approve all proposed spot Bitcoin ETFs simultaneously in July. Wood predicted that the spot BTC ETF application deadline for ARK Invest would probably be extended by the SEC. The U.S. financial authority may elect to request a comment period or extend the deadline in addition to deciding whether to approve, reject, or defer ARK's application on August 13th. The SEC has a maximum of 240 days, or until January 2024, to make a decision because ARK filed the filing in May 2023. Wood highlighted a notable change in the SEC's response to ARK Invest's ETF filings, noting a shift from previous experiences where the filings were simply denied without any questions or responses. This time, during the summer, the SEC raised inquiries, signaling a more active and detailed review process. Wood expressed enthusiasm about the SEC's questions, interpreting them as a positive sign of genuine engagement. She commended the SEC's research team for their high level of sophistication and depth of understanding, emphasizing their expertise in the matter. According to Wood, the nature and depth of the questions indicated that the SEC was thoroughly examining the subject. Additionally, Wood mentioned that ARK Invest had responded to the SEC's questions, and as of that point, had not received further communication. She interpreted this lack of follow-up as a potentially positive indicator, explaining that the absence of additional communication typically implies satisfaction with the answers provided. Wood expressed cautious optimism, saying there is now a greater chance of approval. She did, however, draw attention to a recent development in the procedure: the SEC's anticipated decision to approve many ETFs concurrently in order to avoid picking a winner. Complexity is added by this communal approval process, especially in light of Grayscale's plan to turn its Bitcoin trust into an ETF. Wood expressed doubts about this conversation's viability and the possible legal issues it could bring up. In the event that the SEC rejects the conversion, Grayscale has threatened to sue again. "I'm not sure if it would upend everything once more if they did that before January 10th, and for the others too, for everybody," she murmured. Nate Garassi expressed surprise at Cathie Wood's remarks, particularly regarding the potential impact of the Grayscale situation on the approval timeline for other ETFs. Wood suggested that there were discussions suggesting the SEC might not permit Grayscale to convert GBTC into an ETF, and this could potentially delay the launch timeline if the SEC opts for a collective approval process. Garassi found these comments intriguing and wasn't certain about their implications. In a separate interview on CNBC's Squawk Box, Wood delved into speculation about SEC Chair Gary Gensler's potential influence on the ETF approval process. She theorized that Gensler's ambitions for a higher position in the Treasury and the focus on the dollar could be contributing to the delay in approving a spot ETF. Wood acknowledged the speculation about Gensler's interest in the Treasury Secretary position and noted the SEC's keen focus on the dollar, despite Gensler's understanding of Bitcoin. In related news, Bloomberg ETF analyst James Seifert noted that 3 spot Bitcoin ETF applications are approaching their deadlines, and that he is confident they would be approved with a 90% likelihood. All right, the deadlines for the 3-spot Bitcoin ETF applications are drawing near. There's a strong chance we'll see SEC delay orders, so I want to get ahead of the game. Delays would not affect our opinions or the 90% likelihood that 19B4 would be approved by January 10th, 2024. Additionally, he shared an update from Global X, which revealed that only 2 out of the 12 applicants had updated their filings, WisdomTree and Franklin, after they filed their revised Bitcoin ETF prospectus. BTC was trading at $35,641 at the time of publication. Wood offered a less than honorable explanation for why the SEC would have previously rejected requests of this nature. Recall that the SEC's position was condemned by a court order in late August, and since then, there have been significant changes. The SEC may have opted to cooperate only after being coerced into doing so, as it has gone from outright denial to complete collaboration. Wood contends that Gary Gensler, the current chairman of the SEC, has consistently refused to approve spot Bitcoin exchange-traded funds because of his personal goals of becoming Secretary of the Treasury. It should be emphasized, too, that the SEC was powerless to block the CFTC's prior acceptance of applications to create ETFs based on Bitcoin price futures in the U.S. market. Rather, the approval of ETFs that are directly collateralized in Bitcoin has always been opposed by it, despite the fact that the judge who rendered the decision in late August made it very evident that the legal justifications for this are unclear. Therefore, political rather than legal considerations would have driven this decision. And based on Wood's statement, maybe those reasons might be linked to Gensler's individual interests. Remember that the U.S. government is currently Democratic, and as Gensler was the chairman of the CFTC under Obama's Democratic administration, he is a member of the mainstream Democratic Party. On the other hand, Donald Trump held no official position in the government throughout his Republican presidency. Janet Yellen is the Treasury Secretary at the moment, and it's possible that Gensler wants to take her job should the Democrats win the next election. Republicans appear to be more in favor of the cryptocurrency world than Democrats are at this historical juncture. In 2018, Gensler, a professor at Boston's esteemed MIT and without a position in government, gave Bitcoin high marks. In June, Nasdaq and BlackRock took significant strides in the competition to launch the first spot Bitcoin ETF in the United States. Following BlackRock's application, several other asset managers, including Fidelity, Invesco, WisdomTree, VanEck, Bitwise, and Valkyrie, promptly submitted revised filings seeking approval for their spot Bitcoin ETFs. Prior to this surge in refilings, the only existing application was a joint submission by ARK Invest and 21 shares in April. The SEC has consistently rejected all spot Bitcoin ETF applications, citing concerns related to fraud, market manipulation, insufficient regulation, and a lack of proper surveillance in the underlying Bitcoin market. Subsequently, CBOE expeditiously filed amended files for other companies, designating Coinbase as their collaborator for the agreement on surveillance sharing. Following suit, Nasdaq revised its application on July 3rd to include information about a surveillance sharing agreement it had with Coinbase that went back to June 8th. It is anticipated that the presence of these agreements with Coinbase, the market leader in spot Bitcoin trading, will allay worries about market manipulation and clear the path for the establishment of a spot Bitcoin ETF. According to Galaxy CEO Mike Novogratz during an earnings call, officials from BlackRock and Invesco believe that a Bitcoin exchange-traded fund will likely be approved in the U.S. within the next 4 to 6 months, which has the community optimistic. The prospects of at least one spot Bitcoin ETF being approved and introduced this year have also increased from 50% to 65%, according to Bloomberg Intelligence ETF experts James Seyffart and Eric Balchunas. Although the SEC has previously denied a number of applications, experts think there is a good likelihood that some of the current proposals, in particular BlackRock's, will be accepted because of the company's impressive record of approving ETF applications. Furthermore, favorable developments in the SEC's action against Grayscale, which analysts predict will favor the asset management, and Coinbase's apparent acceptance of its Bitcoin trading platform could serve as impetuses for the approval of Bitcoin ETFs. The cryptocurrency market would reach a major milestone if a Bitcoin ETF were approved, opening up greater institutional access to Bitcoin investments. That's all about today's video. If you like this video, don't forget to like and subscribe to our channel. Also, press the bell icon to get notified of our upcoming videos. Let us know your opinion in the comment section below.